if that's one thing I could say is like when you know that you're onto something, you kind of proven the system, you've proven the model, just jump in, because you can't see what's behind that wall, and when you don't know what's behind that wall and all you can think of is really fear, you'll never really be able to realize the truth that's behind there. And sometimes success is just beyond that wall.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barrow. Gino, how's it going?
Mr. Stenziano, I'm doing really good today. How are you doing?
Always making it happen, big man. We got a double doozy today. We got 4 people on this show. I hope the internet bandwidth can handle this. We just got to make sure the kids are off the Zoom, and the Netflix and Disney Plus. So,
what about Hulu?
anyways,
You got Hulu too, don't you?
got the Hulu, got it all going on. No cable, cut the cord. So. All right, without further ado, today's guests are Dickerson and Julie Lam, co-founders of Goodegg Investments, a company that helps people invest passively, in real estate syndications. They are also the co-authors of the book Investing for Good, the surprising strategy for building wealth while also making an impact. So without further ado, ladies, welcome to the show.
Thanks for having us.
Hey, it is our pleasure to have you here. So tell us the story of, how the relationship got started and why you decided to start a real estate company.
Well, I'll start with the partnership part. Yeah, this is Annie. So when I first got into real estate investing, I looked around and I saw these great partnerships like yours. And I was like, man, I'm never going to find a partner. It's going to be impossible. How am I going to find somebody with my same high standards, my same hustle, my same passion for real estate investing? And I was like, you know what? I'm just going to have to go this alone. I'm going to have to figure everything out. It's okay. And as luck would have it, Julie and I met at a real estate investing conference a few years ago. And at the time, I had just quit my job. I was working as a creative director at the time, and she was really wanting to quit her job. Mm-hmm. And we struck up a conversation at the networking happy hour, and we both had kids. She has 3 kids, and I have 2 kids. And we were talking about being in this business as a woman, as a mom, as a working mom, and we just hit it off, but we didn't talk about a partnership at that point. She was running her business and I was about to run mine. And we were like, okay, well, let's just, let's see how it goes. Let's keep up with each other and meet up in a couple months or so. And so we did. A couple months later, we were still at it. By this time, Julie had quit her job. She actually went home from that conference and she quit her job to go full-time into real estate. And then we met up a few months later, and it was just a working session. Again, we weren't talking about a partnership, and we were just trying to catch up. And we were sitting across the table from each other, and she goes, "So, now that you've been in this business a little bit, what do you like about it?" And I said, "Oh my goodness, if I could tell you, I would spend all day creating content if I could. Blog posts, videos, what have you. I love teaching people. If I could take one thing out of my calendar, it would be meeting with and talking with investors." Oh my gosh, it breaks up
I
my
just
day.
have to interrupt right there, because it was at that very moment, like the heavens, like were speaking to me. And it was just like because I already had my business going on for probably about 7 months or so. And that was the one piece that I was just struggling so hard with, was the content. And I just hated it. I hated the blog posts, hated the videos, struggled with it. And she was just like, oh my gosh. And it was just like, this is it, And so it was kind of like, heaven sent when she said that. And then go ahead, I'll let you finish.
Yeah. And then as luck would have it, Julie said, "Oh my gosh, I love the investor calls." She has a legal background, right? So she's like, "Oh my gosh, give me all the tough questions. I love all those strategy and investing and all those tricky questions." She's like, "I sit in front of a blank a blank screen and I know I'm supposed to blog, like you were just saying, I know I'm supposed to blog, I don't know what to type. And so at that moment, we both looked at each other and we're like, huh, well, so wait a second. So you like that, I like this. And we're both trying to help the same people. Maybe there's something here. And so that was when the seeds of the partnership were really planted. And then we went on from there to get to know each other better, know each other's working styles better, because as you know, in this business, partnerships are so important. You can't just rush into them. You have to take the time to really vet the other person and make sure that they're going to hold up their end of the bargain, right?
Yeah.
So what is it that you didn't like about speaking with investors? I need to know. What was that stuck
Oh my
point
gosh.
of not
You
speaking
know
to
what?
investors?
I love talking with investors, but the thing is, like, as we were just talking before we hit the record button, you know, I'm not great at multitasking between creating content and talking with investors. I find that when I need to create something, which I love creating things, I need to be heads down focused on that in order for it to be the best piece of content that it can be. When in the middle of the day, then I have an investor call and then a coaching call and then another investor call. I have to shift back and forth, and my brain doesn't do that very well.
So Julie, what do you like about speaking to investors? Can you give us some tips on speaking to investors?
Yeah, you know, it's almost like it's, well, at the end of the day, it's kind of like a sales position, right? I mean, you're trying to convince somebody to invest in one of your deals. And, you know, in the legal field, everything that we did was, from a legal perspective, it was trying to convince. You're always trying to persuade, right? In your analysis of any kind of legal situation, you're always trying to persuade somebody to convince them to be on your side. And so there's so much of that in a conversation. I just love when, people challenge you with different kinds of questions. And it also helps me to learn as well, because they'll ask questions sometimes that I don't know the answer to. And I'm like, oh gosh, I'm not sure. And I tell them I don't know the answer to that. And I'll try to figure out an answer and then tell them I'll get back to them. But I learn so much talking with my investors, and it's just such a fun process for me. I mean, I think if you can, learn how to anticipate people's questions before they actually ask the questions, you actually turn into kind of what they think is a mind reader. And in the legal field, that is such a strong, good characteristic to be able to have, right? Because if you can sort of read people's minds and answer the question before they ask it, they're sort of like blown away. They're like, wow, how did she have that intuition? How did she know? So for me, it's kind of like a game when I talk with people and when I talk with investors. And I love it. I love it. I could do it all day. I do it all day.
And what was so great about our partnership was that Julie would be on the phones all day talking with investors, and then she'd be like, oh, Annie, there 3 investors asked me the same question today. And this was the question, it was about, let's say, cap rates. And I'd be like, oh, cool. Okay, so let me take that. What exactly was their confusion or their misunderstanding? And we'd talk about it. And then I'd say, cool. Okay, let me go create a blog post, or let me go create a video around that. And then so all of a sudden now, Julie doesn't have to answer that same question over and over again, because we know not only did those 3 investors have it, dozens of other investors are having the same question, whether they know it or not. So now we have a piece of content that they can self-serve and they can find themselves, and they can get their own question answered before they ever even hop on a call with us. So when they hop on a call with Julie, now they can focus on their unique situation and their strategy rather than terminology.
I love that. So everyone out there listening, there's 2 golden nuggets here. The first one is about partnerships. If and when you form a really great partnership, you can gravitate towards what you enjoy doing. You'll become more productive, and you'll be, I think, living more towards your sole purpose. Whereas Annie's life might be sucked down because she's talking to investors, and that's not where she gets juice, and that's not where her enjoyment is. I think partnerships allow you to do that. And I think the second thing that Julie mentioned is she's planting the seed. I'm reading the book by Oren Klaff right now, Flip the Script, and it's the inception. You're planting the seed in the person. People want to buy. They don't want to be sold. So if you're able to plant that seed in a person's mind by letting them come up with the idea that working with Julie and Annie is going to be pleasurable. You're going to have all your answers, your questions answered, and multifamily is the way to go. If a person can come out of their own mouth without you selling them, that is the key. So those are really excellent tips and topics that you guys are really diving into. You have a capital raising course. I want to go into that a little bit because it's important on raising capital and the steps that you find on raising capital. So can you guys, each one of you, give me an overview of what the course is?
Yeah, Annie,
Sure.
you want to start with high level and then we'll kind of dive in.
It'd be great.
Absolutely. So our course is called the Real Estate Accelerator, and we didn't set out to create a course. Let me just put it that way. We didn't set out to create a capital raising course. What happened was so many people were approaching us and they're like, oh my gosh, how are you doing this? We only started our business about 2 years ago. In that time, we've done about 25 deals and we've raised tens of millions of dollars across hundreds of investors. And people are like, how are you doing this so quickly and so successfully? I want to learn. Can you hop on a call and teach me? And we're like, well, sure, but there's only so much I can teach you in a 30-minute call. And we don't have lots of these 30-minute slots. And so as more and more people approached us, we said, okay, well, what would it look like if we were to put something together? And Julie and I, being the givers that we are, we were like, okay, well, we have to make this so good that people can't resist it. We have to pack everything into it that we possibly can think of. So what we did was we opened the back end of our business and we said, okay, let's take a look at everything in our business that's working. And let's see if we can just cut it out of our business and give it directly to our coaching members so that they don't have to reinvent the wheel. So that is really what the course is about. It focuses on capital raising, and it does so through teaching people about defining their target audience, how and what to put on their website so that it turns into a lead generation machine. And then on the back end, all of this stuff, including funnels, and we give them our exact automations, our exact drip campaigns that we use with our investors, our exact forms, all of our exact templates, all of that stuff. We try to make it as easy as possible. And then on top of that, we throw in unlimited time with me and Julie, because now we're able to carve out that time. But Julie, I'll let you add.
Yeah, I mean, I think the biggest thing that we wanted it to be for everyone was sort of like this idea of like business in a box, right? Like, how can we take our entire business, hand it over to someone and get them up and running, to have the systems in place, have the scripts in place to know what to say to investors, and just have their website, they have their logo, they have their name, all of that defined with like, the brand, as Annie mentioned, the target audience, all of that, so that they don't have to waste all of their time trying to figure all of that out to get to a point of having those investor calls just show up on their calendars. And that's the way that Annie and I have it set up now. We don't really do any marketing. I mean, we go on podcasts and things like that, but we don't spend money on marketing and things. People just end up on our calendars. They find us either through being on podcasts or word of mouth, and people just end up, I wake up and my calendar is full, and it's all because of the funnel and the way investors move through our system. And then I talk to them on the phone. But as we talked about earlier, a lot of that has already, all of the questions that they had have been answered through a lot of the content that Annie had produced. So we also give them a lot of content too. So it's a lot of like done for you blog posts. We do, 1 or 2 of those a week. We give to folks. Yeah. We, help them with their newsletters. We help them with, the investor calls. And it's just a lot of like strategy too, because I think when people get into this business, as when we were first starting out, it's like, you don't even know where to start. It's interesting how capital raising in and of itself is just such a huge, it's like a whole nother business, right? So you got the acquisitions, asset management side, and then you have the capital raising side, but it's like this whole other thing. And you have to have the systems. You have to know what you're talking about when you're on the phone with investors. And otherwise everything that you're doing is kind of like a waste of time, because you'll get on the phone, you don't know what you're talking about. You don't know how to convert the lead and turn them into an investor. It's sort of you're going to be spinning your your wheels. So we took everything that we've learned over the last couple of years and put it in this academy, so that people could just, get out there and get to what they want to do, which is raising money, instead of wasting time on the back end trying to figure out what works, what doesn't work, how do I talk with investors, how do I convert leads, and all of that good stuff. So
one of the unintended consequences is that people who buy your course, a lot of them probably don't even use the course and they become investors, correct? So, I mean, can you speak about that a little bit? Because that's what we find with Jake and Gino. A lot of students want to become passive investors. They'll learn the model, but then they'll see that multifamily is really hard. Capital raise is too hard. And they'll be like, you know what? I'd rather just invest with Julie and Annie.
Yeah. Yeah, we haven't had that happen yet. A lot of the people that have come to us are really serious about what they do. And we do have like an application process, because we do want this to do what it's intended to do for people. So the last thing we want is people to sign up and then it doesn't do what it's supposed to do. But, we ask folks on the onset of what they're trying to get out of it, right? And if we get the feeling that maybe they don't have the drive and the ambition and the desire to really do the capital raising, because it does take so much work and you do have to commit yourself. Even having us on your side, there's a lot of work on there, and then it may not be a good fit. But yeah, at this point, we haven't had anyone had anyone convert over. We do suggest a lot of them run through our funnels themselves, so that they kind of see what the experience and the journey is like for investors, but haven't had one convert over to an actual investor yet. But that's interesting. So you guys have a lot of people that invest with you instead, right?
Well, what happens is we have the 3-step framework, right? We have different models. We'll teach the syndication model. We'll teach the partnering model. We'll teach the buy yourself model. So we'll get a doctor who wants to invest in multifamily, and then all of a sudden he's like, yeah, I'm gung ho, I'm going to buy my own properties. Then he's like, hold on, this is a lot of work. This is a business. I'm a passive investor. I want to invest with Jake and Gino. Or even if they want to invest with other sponsors, still going through the education is vital, because you need to underwrite a deal. It's almost like a person wants to invest in mutual funds. That's so low level. You're giving your money to somebody else. You really want to learn about the stock market. You want to learn about index funds, and you want to learn about commodities. And that's what you want to do with your education. So if somebody's taking your education, learning the capital raising and learning the multifamily itself is really vital. It's really important, because you want to be able to speak the lingo. So that's what we found.
Yeah. It's funny. I feel like people who realize that they have an affinity or a desire to capital raise, I think they know that coming into the program. They know that they love talking with investors, and they love not so much. I think a lot of people struggle with the content creation, which is why this, having Annie is so valuable. She talks to, way more people in the program than I do, because people want to tap her to understand how she's creating her content, how she's creating all of that, so that it's so targeted. I mean, it's so invaluable. So I think that's another piece of it that a lot of folks benefit from is the content creation.
I forgot to ask you from the beginning, how did you come up with the name Goodegg?
Well, Goodegg is the combination of building your nest egg and investing for good. So Goodegg.
Oh, I like that. So investing for good, that is good. So you have a sole purpose. You have a purpose for investing for good. I really like that. That's excellent. You mentioned a couple things in here. You talk about the customer journey and the customer experience. How have you made your customer journey or experience better for your investors?
Oh gosh, it's been a lot of trial and error. It's been a lot of, feedback from the investors of letting us know, hey, it would have been nice if X, or just wanted to let you know that I had to do this before whatever. But a lot of it is, really trying to always thinking about the experience from the investor standpoint, not how we want it to be, but really stepping out of our position and really stepping into their shoes and trying to understand how they see the journey on their end of it, which I think as an entrepreneur and as a business owner, you often get lost in that, right? You often see, I own this business, I want it to be a certain way. You think, but you're not really thinking about the feedback that you're getting from the people who are actually going through the journey. And so for us, it's been a lot of listening, really listening to what the customer is telling us or the investor is telling us that they want or what they don't want. And so, you know, a lot of it is making it easy, right? So you don't want, if you make this journey difficult for people, it is going to be an uphill road for them. And that is not the way you want somebody, or how you're going to get somebody to convert, right?
Mm-hmm.
So everything is about how can we make it as easy as possible? How can we give them all the information that they might need? And a lot of that comes in the way of our drip campaign that we have set up. And again, it goes back to anticipating the questions that investors are going to have before they even get on the call. So, you know, it's you know, getting the funnel set up so that when I talk to them, a lot of those, you know, questions have been answered. I mean, what else, Annie? Help me out here. What are some other things? I mean, it's, you know, listening to the investor is a lot of it.
Mm-hmm.
Yeah, that feedback is really a gift. And, you know, it taps into both sides of the business, the investor relations side and the education side.
Mm-hmm.
And so, you know, on the front end, before people ever even think about joining our investor club or talking with us, they have to get to know us and our brand.
Mm-hmm.
And
Yeah.
so we very intentionally make that part very approachable, very welcoming. If you were to go to our website, you'd see there's no buildings on it. There's no hard edges. It's not intimidating. It's very welcoming. There's pictures of our family there, just like on your site. And it's really not about real estate as the end vehicle. It's not like we love buildings and we love underwriting. We love real estate for what it can do for us and our families and the communities. And so that's what we try to communicate through all of our content and through our brand. And so if you were to read any of our blog posts, man, Jake and Gino, I cannot tell you the number of times I've typed in a term like capital preservation. And then I'm like, no, people don't know what that is. Delete, 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 delete. Protect your money.
Mm-hmm.
And that's, you know, at the end of the day, that's what's going to connect with people. That's what's going to keep them reading your blog post and keep them learning, is if they understand. I swear, even the guys in suits, you know, they project this reputation and this, they're like, oh, I know it all. And then they're like, oh, they read our blog post and they're like, oh, I thought I understood it before, but now I really understand it, because they were too intimidated to ask the question.
Mm-hmm.
But if you provide that content at a level that anybody can understand, it helps everyone.
I love that. So in your customer journey, you do emails, you do phone calls. Do you do any texting with investors? Do you send out any gifts, any cards with them to them?
We don't. We tried text messaging once. I think we did that, and the
Mm-hmm.
feedback wasn't too good. People were like, "Take me off this thing. Don't text me." And, you know, and I understand it's kind of like an invasion. I mean,
Yes.
you're like, "Whoa, who is this? How did you even get my phone number? Who are you?" But no, we send out T-shirts and things like that. Yeah, what do you guys do? I'm curious.
Well, I mean, for all of our entities are different. So we have a property management company that's doing a customer journey. In the meanwhile, our investor journey, just trying to get them to log into the portal. Once they're in the portal, you always want to set up a call, because it's always about them. It's always about finding out what their goals are, right?
Totally.
What their investment criteria, and seeing if we're a good fit. Because maybe they may not be a good fit. Maybe they're a long-term investor and we invest for 3 to 5 years, or vice versa. So I think getting on the call is important. And I think obviously what you're all doing is with that inbound marketing, sending out, you know, pieces of content out and getting people to reach out to you. And then obviously monthly newsletter. We send out a monthly newsletter with updates. We will do quarterly webinars. On our very first syndication, we did monthly webinars. On our first syndication we took over, it was a great experience for us. So every month our investors got on a webinar with us. We recorded it under the process and what was going on with the property. And now we just do quarterly ones for each property that we own with investors. So it's another touch point to answer all of their questions.
Yeah.
If they have any questions. And the great thing about it is if you're doing any raises or you have any other deals at the end of the webinar, oh, by the way, we have a deal in the works right now. So you're trying, like you said, to be as open and as transparent as possible to the investor. Right. You're trying to get them to like you, because they have to know, like, and trust you. Because ultimately, when you're building your brand, you know, they know there's something off. If they don't feel you, or even if the deal, sometimes they don't even want to look at the numbers. If they like you, they'll do business with So that's important. But actually qualifying them, because you want to make sure that you're a right fit. Because the worst thing you guys know is having an investor who's not the right fit, who will just drive you nuts. Why didn't you do draws during COVID? I mean, really? You're asking me that question. The money's in the bank. We've doubled the pref rate, but it's there because we don't know if next month they're going to pay rent. So it's just amazing. That is the investor that I don't want in my next deal. So that's important. I mean, when you first start out, it's very difficult. You want to just cast a wide net, but as you start scaling up, you're going to be more selective, and you can be more selective. So I think that's
Gino, also, like when people close deals, we'll send a swag pack, which will have, like little goodies and things like that. And then office hours. So our asset manager will get on, Fridays and have like open hours where people can Zoom in and speak to them and things like that. It's part of the journey as well.
And the thing is, you're never done with your customer journey, right? You're 90% done, because then obviously you two are making it happen. I got this idea. Let me tweak this. Let me tweak that. So it's never done. So there's always different touch points. Yeah, you feel the pain, right?
Well, even like in the property management, we sent toilet paper out last week with our stickers on it to all the residents and said, your Ran fam is here to make the best of a crappy situation. So we're it's Gino's point. It's always evolving, always trying to find ways to add value and have fun with it.
To involve the team, yeah. Julie, you had mentioned there's a lot of questions from investors. What are some of the big questions that investors ask you?
I guess it would be, a lot of it is around how it works, right? I mean, when people hear about syndication, they hear about a 20% annualized return. It's like, yeah, this is not real. And so you're immediately met with like so much skepticism always, right? From the beginning. And so they just want to know, it's always very like, well, I found, I heard about you on a blog, or I, saw you on Facebook or something. And I'm just curious about how it all works. But sort of how it works, who the limited partners are, who the general partners are, how the splits work. People don't, I think the cash flow, the 7 to 8% preferred return people get, but it's the cost segregation, right? It's the tax benefits and the equity that I get a ton of questions about. Is like, where does that big payout come from? How do I get my money on the back end? How do I get all of that back? And so it's really, walking the investors through the process of, why a 5-year hold? Why an 8% preferred return? How do we get an additional 10% return on the back end annualized per year? So it's just a lot of like process and explaining. The best thing that I always go back to is taking people back to a single family home, because most people know, right? They bought a single family home. A lot of people come to us, they have 1 or 2 rental properties or more. And so I always take it back to, what we do, the B-class value add deals being very similar to buying kind of like a fixer, single family home, and, going in and making the renovations and then turning it around a year or 2 later, and how that equity spread in between is how we make the bulk of the money on the back end. Another question that I get often is, how do we get paid, right? So people are like, this all sounds great, and you're telling me how I get my money, but how do you get paid? So it's walking them through the 3, biggest ways that we get paid, which is acquisition fees, asset management fees, but the last one, which is the way you want it to be, which is the big payout at the end, right? On the types of deals that we do anyway, the value add deals. And so just walking them through that process is really the piece that I feel like takes them from being skeptical to being like, oh, okay, I really understand this now, and I see how it's kind of fair for everyone. Trying to think, what other questions do we get? I mean, obviously right now with everything going on with COVID-19, people want to know what are the plans for the next, 6 months to 12 months? What do we see coming down the pipeline? So a lot of people come to us as asking us to be kind of like a resource to them, because they're not so connected with the real estate industry. And so it can be a lot of general questions like, what do we see coming up? I used to get a lot of questions about a year and a half ago. Do you think we're at the top? Are we at the top? Is the recession coming? It's like, I don't have my crystal ball, but here's what I think is going to happen. And I, give them the insights that we have and things that we've learned. But
did you guess COVID?
Did not guess that one. Never could have seen this. I'll tell you that what's happening right now is pretty insane. But back in January, when all of this started happening back in China, Annie and I were just about to leave. We were days away from leaving to go out to Tennessee for a conference. And I was hesitant to even get on the plane back then. And I canceled all my travel. I was like so paranoid about everything through February. And yeah. So
wow. Annie, let's go back to your very first syndication. Difficult one, difficult to raise the capital. What advice would you give people when they're starting out in their first syndication?
Oh boy. So many pieces of advice. Where do I even start? I feel like, it's like with a child, they're learning to walk and you're like, oh, don't touch that. Oh, be careful over there. Don't bump your head right there. There's so many little things that you can get caught on. But I think probably one of the most important things when you're first starting out is to really vet the partners that you're working with. And whether you're co-sponsoring or you're doing your own deal, really taking the time to get to know all the people on the team and define their roles, your roles, because that's only going to set the partnership up for success. So I would say first, vet the people that you're working with. And then second, I would say the work starts before the syndication ever gets under contract, the deal ever gets under contract. I think that's the part that most people don't understand. They spend all this time underwriting a deal and they figure if they just find the one, that really good deal, that all the investors will come running. They'll bring all their money and they'll be like, oh my gosh, these are the best returns I've seen. This is a great market. I'm going to put my money here. And it just doesn't happen that way. It goes back to what you were saying. People invest with who they know, like, and trust. And if they don't know that you're doing syndications, if they maybe haven't talked to you in a while, they haven't heard from you, they don't know what you're up to, they're not just going to run and put $50,000 or $100,000 into the first thing you put in front of them. And so that's the other thing, is the work starts before you get the deal under contract. And you have to really take the time to let people know that this is what you're doing. Take the time to have those conversations, to educate people, to answer their questions, so that by the time the deal comes along, they already have all their questions answered. They're ready to invest in the deal. And so that will reduce the friction for you getting into that first syndication, because that first syndication, let's be honest, is going to be a doozy, whether it's a great deal or not, because there's just so many things that as a new syndicator, you won't know until you get there. So the last thing you want to have to do is struggle to raise capital at the last minute.
Julie, you want to add on to that? Because I know you've got a lot of different, from raising the capital to creating the content, there's two different ways of looking at it. I'm sure you have your own challenges and struggles from the first one as well.
Yeah. I mean, I think Annie hit the nail on the head. I mean, knowing who you're working with is the big piece of it. If you partner up with somebody and you don't know who you're working with, it can be a long road ahead. Very similar to if you're an investor, right? I mean, when you're an investor and you don't know who you're working with, it can be a long journey. But yeah, I don't know. I mean, Annie pretty much hit the nail on the head with those things. I don't know that I have too much to add. But yeah.
Okay. Last question for the short answers. I want you both to answer this. Multifamily is a long game. It's not transactions. How have you both been able to stick in this game for the long term? And how would you, tell people it's not about transactions, it's about equity?
I would say communication is huge. I mean, like you had mentioned, all the different things that you guys are doing, to maintain your open lines of communication with your investors. I would say that's probably the one thing that we have always focused on from the beginning. And we have prioritized that so much so that it is something that we do not take lightly. Every piece of communication that comes out from us is always well thought out. We never shoot stuff out that is like, just on a whim. Everything is well thought out. And so I would say that, how you communicate with investors, look, at the end of the day, I think you can lose investor money, but not that that's okay. And not that that's what you want, but if you lost your investors' money, but you were communicating with them every step of the way on how that happened, what you're doing to mitigate the risk moving forward, and what you're doing to make the situation better, totally different outcome than if you were to, just, lose investor money or not be able to make distributions and people never hear from you, or you're not telling them, you're not being proactive about how you're handling the situation, or you're not, communicating with people. that totally different experience. And, one investor is going to invest with you again, and the other one is just not, even if it's the same situation. It's all in, how you handled it. So I would say, for us, communication is huge. Yeah.
And you, Annie?
I'm going to take a completely different approach to this question. This is what I love about Julie and my partnership, is that we often have very complementary approaches to things. So absolutely 100% the communications. For me personally, I think in a previous conversation, I had mentioned in the 10 years following college graduation, I held 9 jobs, and I was just chasing impact. I started out as an elementary school teacher with Teach for America because I wanted to help close the achievement gap. And then I was like, oh, but one classroom isn't enough. I have to leave and have a wider impact on students. So I went into game design to try to make educational games. And then from there, I went into corporate learning and development, creating trainings for companies. And every time I left a job, it was because I was like, okay, I'm not impacting enough people. And when I got into multifamily syndication was the first time I felt like, oh my gosh, it's a win-win for everyone involved. We are having an impact on the communities because we're adding value, we're revitalizing these assets, and we're having an impact in the lives of our investors. And helping them to create passive income and build wealth for their families so that they can live an intentional life and find their true purpose. It's a win-win all around. And so that's how I think both Julie and I agree on that point, is we're trying not to just help people build a little bit of equity or a little bit of passive income for the short term. We're trying to help people set themselves up for financial freedom so that they can live out their true purpose in life. And so I think that's what helps us in the long term. And I'll be frank with you, it's been over 2 years since we first launched this business. This is the longest I've ever held a job, guys. And I don't plan on leaving anytime soon because I love it so much. I love all that we get to do. I love our partnership. I love the impact we get to have on people's lives.
So you are unemployable, Jake. Before you sound like a guy like Jake, where you are not employable. You cannot go out and get a job. So you have no choice but to work for yourself. So
exactly. I wish I had known that in job 1. It took me 9 jobs to figure that out.
I like that.
I think we have a little kumbaya capitalism going on over here. Is what I'm hearing. We need a little bit more of Annie speaking to the youth out there to let them know what's possible. I think that's
okay, right? It's okay.
There needs to be a support group for people out there like us. I never knew that there were others. I just kept going from one job to the other, and I look around and I'm like, how are you able to hold a job for 5 years? That seems like an eternity. I'd look around and everybody was staying in their jobs, and I was like, how are you doing that? And then they tease me. They'd be like, oh, I can't even keep track of what job you're on. And I'm like, I don't know what's wrong with me. And it turns out I was supposed to be an entrepreneur all along.
Yeah, I think it's the point about creating value is a good thing all around, and so many people get lost in the weeds and money is evil kind of stuff. So I think that's your next course right there is spreading the good word. So let's take a quick time out to hear from our sponsor.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of
All right, we are back. I want to hear from both of you. What is your best habit for success? Something that you do on a daily or weekly basis that has led to your success?
I'll go first. For me, it's, making sure that I have the pockets of time to spend, as we were talking about a little bit before we started recording, was, having the time to spend with my kids, without interruption, having the time to do my work without interruption, having the time to exercise, do my journal writing, do my meditation, having time, just like, having those little buckets of time for me is what has contributed to, I think, my ability to do so many different things, have 3 kids, run a business, and do all of this, is being able to, bucket.
What's the how behind that? Is that shutting the phone off? Is that time blocking? What's the secret sauce?
Time blocking. Everything that happens is in my calendar. If it's not in my calendar, it's not happening. So I down to 30 minutes for yoga, or, take 10 minutes to be with each of my kids, or, time for bed, just a reminder. So everything that's in my phone is it's happening. If it's not in my phone, it doesn't happen. So for me, I live by that.
But what happens when you're in the middle of a yoga pose and Annie's calling you up? And do you take that, or do you push that off?
Decline.
The phone's not near her, bro.
No.
So the love runs deep, but not deep enough.
Yeah.
So.
There you go. Absence makes the heart grow fonder. You gotta have those dividers.
Yeah.
So what about you, Annie?
Yeah. Well, the calendar thing is huge. Same. I used to have sticky notes all over my desk, and now I put it all in my calendar. But the other thing that I don't do it every single day, but I try to, is I've made somebody once told me about this. It's called a mind movie. And it's just a short, it's like a 2 or 3 minute video I made for myself. And it's sort of like a slideshow. It's got clips of me with my family, me and Julie, and our business, our family life, and it's set to music. And I try to watch it in the morning and at night, just to remind myself of why I'm doing all of this. It sort of helps to put things into perspective when I know I've got a tough day ahead, or I've just had a tough day, and I can look at that and remember, this is why I'm doing this, and everything is worth it because of all of this life that I get to lead.
Mm-hmm.
It's like a quasi-visualization, mindfulness, meditation act. Very cool.
Yes.
So let's stick with you, Annie, here. What is your best tip for someone starting to scale a business?
Ooh. I think when you're starting to scale a business, I think you have to look to others who've gone before you, because I think when you're scaling a business, you have to follow what works and figure out what works and what doesn't work. And you can either do that on your own and figure it out and try to reinvent the wheel, or you can leverage the experience and the success of others who have gone before you. And so when we were scaling, that's exactly what we did. We leveraged people around us, and we said, hey, we're struggling with this over here. We seem to be repeating this same process a lot. It's, barely keeping our head above water. And they would say, oh, well, have you tried this? This is what we do in our business. And we'd be like, oh my gosh, that's brilliant. Okay, let's go and try that. And so I think it's finding people who have gone before you, who've had that success, leveraging them, picking their brains, and implementing what has led to their success.
What do you call that, Gino?
I don't know. What do you call it?
You got a term for that. Come on. Pay to play or seek to serve?
Oh, that's right, my friend. I'm sorry.
Yeah.
Pay to play or seek to serve. That's right. Caught me off guard, Mr. Stenziano. I'm taking notes.
And I'm trying to keep everybody on their toes here. So, Julie, what was your biggest mistake when starting out?
Biggest mistake. Gosh, there were so many.
Partnering with me.
No.
She just wants you to have a shared calendar so you stop texting her, call her when she's doing yoga. It's boundaries, Annie, all right? Come on.
I'm learning.
I guess I would say the biggest mistake was, not doing it sooner. I know a lot of people say that, but it's the truth. It took me a long time to give in. I was so afraid of leaving my job, leaving this good paying job, and I was with young children at home, and I was just really afraid of doing that. And I stayed on for probably a year longer than I should have, because I put in my notice and they asked me, well, where are you going? And I didn't want to tell them what I was doing. And so they said, well, what do you want? And they just basically gave me everything and anything I wanted. And so I stayed on on for another year. And I often look back on that year and I wonder how much farther along could I have been. But the one thing is that, you know, timing is everything, right? And I wouldn't have met Annie. I wouldn't be here right now talking to you fine folks if I hadn't waited that time. But if that's one thing I could say is like when you know that you're onto something, you kind of proven the system, you've proven the model, just jump in, because you can't see what's behind that wall, you know. And when you don't know what's behind that wall and all you can think of is really fear, you'll never really be able to realize the truth that's behind there. And sometimes success is just beyond that wall, and all you need to do is get out there and you know, give it your best and give it your all. And so yeah, that for me was if I could do it again, it would be that, is to jump in sooner.
Take the leap. What book has made a big difference in your life? I don't know if you're a reader, but has there been a business book or something that you've read that's made a big impact?
I hate to say it because I know everybody says it, but for me, it's the Little Purple Book. It was Rich Dad, Poor Dad. I read it in 2016. I read it a long time ago, and then I read it again in 2016. And it was, I committed at that moment. After I read that book, I said, this is it. I'm going to do whatever it takes to figure out exactly everything he's talking about in this book and all the passive income streams and all of this stuff and make it happen. And it was from that moment on that I committed. It was, for me, it was reading that book, but it's such a powerful one for so many, for obvious reasons.
So glad
no reason to be ashamed. It's a great book.
Yeah.
Yeah. I'm so glad you brought up Rich Dad, Poor Dad, because recently, you know, with all our kids at home, I've been trying to not only just homeschool on the regular public school topics, but also supplement that. So my older son, who's 7, and I read through Robert Kiyosaki's Escape the Rat Race, which is like it's like Rich Dad, Poor Dad, but a graphic novel style. And so he loved it for years. We've been trying to teach him about spend, save, give, invest, right? And he just didn't get it. He was just like, but why would I save when I could spend today and get my toy today? And I'm like, okay, but you say, you know, we're trying to explain it. And we read through this book. I kid you not, as soon as we closed the book, he went over to where he keeps his money and he's like, okay, I need 3 jars. I need the spend jar, I need the save jar, and I need the give jar. And he's like, okay, I need to take all my money out of my wallet and I need to put it in the save jar right now. So he put like all of his money in the save jar, and he put some in the give jar, but like nothing in the spend jar because he finally got it. So yeah, Rich Dad, Poor Dad is a great one. And then for those listeners who have kids, check out Escape the Rat Race. It's a great one too.
Escape the Rat Race.
Annie, what project are you excited about right now?
Oh man. Well, you know what? So right now in the midst of COVID-19, you know, Julie and I have talked a lot about, you know, how our business is changing and how to potentially pivot. And so even though it's a tough thing to think about how to pivot your business or how to create new streams of revenue, I love thinking about this type of stuff. And Julie does too. We love brainstorming about this type of stuff. And so I don't know exactly what that project will be yet, but I know that we are on the verge of potentially creating something new. And so we love doing that. You know, we created it back in the day, we created a course for our passive investors, and then we created a course for people learning to raise capital. And now we're just looking across our investors as well as our coaching members to see, you know, what else can we create for them that would help them. And so I think that's probably the project that's coming down the pipe.
Cool. And Julie, what is the best way for folks to get a hold of you? So because it sounds like you're taking those inbound calls there. So
yeah, they can just reach out to me at julie@goodegginvestments.com, and they can learn more about us at goodegginvestments.com.
G-Dad, what else you got?
The quote of the podcast: absence makes the heart grow fonder, Jake. I'm not growing fond because I'm not absent from you. I'm talking to you like 6 times a day. So maybe I should stop talking to you a little bit and I'll grow a little bit fonder. I don't know. Maybe I'll test that little principle.
Not with the way our systems run and the amount of calls with meetings that our team has, man. I don't know if that's even possible.
I think there's been a lot. If everyone steps back, I think one of the more important things is the customer journey, the customer experience that you have with your investors. I think really, first of all, coming up with a great name and a great brand and a reason why you're doing something, I think is the most important thing. We didn't dive into mission statement and core values, and I'm sure that they have them. That's what's guiding them. I think the next thing is, if you have nine jobs in 10 years, you're not weird. Maybe you're just an entrepreneur, right? So there are all of us that are different. So if you're out there and you're struggling and your things don't work out, take a step back and reassess what you love to do, and take you don't have to be like everybody else. I think that's really important. Other stuff, Jake, there's so many things in here. I like when, Julie talked about defining the target audience. I love that. Then talking about her lead generation, then using automation. So their process is really excellent. They've got a process built in for people wanting to raise capital. So become really clear. When you get into multifamily, you don't have to be the owner operators. There's so many different levers that you can pull in this business, and it's great. And I think ultimately one of the most important things that you speak about, and a lot of us speak about and preach about, is sponsors. Sponsors are really important, and partnerships are like being married. Business partnership is like being married to somebody. So make sure you get into it for the right reasons.
So, I have an epiphany. So,
ooh, right. I like epiphanies.
Yeah, no, Annie was talking about like visualization, meditation, and then Julie, was mentioning like, the separation and the fondness of the heart growing. So I'm going to take a step back after this. I'm going to sit down, visualize, meditate to a little Celine Dion, the heart will go on, and I'll think about you, Gino, and I'll just get I'll really get in touch with myself, and we'll see what comes out the other side. So that's where I'm going after this one. Okay.
You got an hour, bro. I've seen an hour, so you better have that done in the next hour. Okay.
100%. Julie, Annie, thank you so much for your time. I really had a blast here, and best of luck in the future.
Thanks everybody.